Hi there, welcome to Kneppy Invest and welcome to the stock of the day. REA Group, ticker code REA, used to be called realestate.com, and they changed the name. That's okay. And I sort of hinted that REA Group might be the stock of the day in yesterday's video, I think. They did release the half-year results on the morning of the 6th of February 2025. And I thought the results on the surface looked really good. A little bit of a slight concern in their outlook, particularly when it comes to costs. And I thought, and probably also should mention, the CEO, Owen Wilson, has decided to retire. And I thought the retirement of Owen Wilson and also the slight blowout in costs, expected costs, might cause the share price to open down. And that's exactly what has happened. But because I am in between night shifts, I came back after my nap and I was pleasantly surprised to see the share price up 2.5%. So it looks like the market has reacted a little bit better than I expected today when it comes to REA Group. Now, if the company didn't have their CEO retire and didn't have this slight cost blowout, I think the results beat expectations and the share price would probably be up 5 to 10% today. So what I'll do in today's video is I'll go through this company's results, of course, have a look at the chart, and I'm also thinking of doing a video titled The Anatomy of a High Quality Company, featuring REA Group and maybe featuring other companies as well, because this is a good company to try to understand how you decipher whether a company is high quality or not, because this company has all the characteristics of a high quality company. And in fact, if you bought shares in this company in January 2005, so you've held shares for 20 years, you have done fantastically well. In fact, I had a look at this just before I started recording. So this is via FinChat. And this is just the total returns of REA Group over the last 20 years. In fact, it's 20 years in 1 month. And the total change, so this includes share price appreciation plus dividends, the total change is 26,980%, which is a CAGR of 32.1%. I would take that, you would take that as a total return of your portfolio over a 20-year period every day of the week. I'm just wondering if someone out there bought some shares in REA Group and that's the only company they bought in 2005 and they've held for 20 years, they've probably retired by now because their portfolio has grown significantly over that period. And this is the characteristic of a high quality company. Compare this to, say, Telstra, Woolworths, CBA, NAB, and you'll see a massive difference between the total change or the CAGR of those companies. And that's why REA Group is a high quality company, and that is why I search for these companies every single day. Okay, so let's turn our attention to REA Group's half-year results. Now, I've opened up their presentation. I don't think we really need to look at the presentation, to be honest with you. I do like to look at presentations because I'm a little bit lazy and they just make it look all nice. I've also opened up their Appendix 4D. I think this is it. Yep. Appendix 4D, which is their half-year report. And I've also opened up the media release. I do like media releases. It's not as pretty as a presentation, but it's much shorter and you can get quickly the information you need. Okay, so what I'll do is quickly go have a look at the Appendix 4D. And there are some interesting things when you do have a look at this particular report. Now, the first thing you note, and the first thing I always look at, is revenue. Has revenue grown? Up 20% from the previous corresponding period. I expected that. The market expected that. I think the market expectations for 2025 was revenue to grow about 20%. I think maybe it was profit or EBITDA to grow at 20% or so. Now, just below revenue, we have net profit after tax. You'll notice that's up 257%. Now, don't be fooled by that. And this is one of the reasons why I don't pay particular attention to profit and earnings per share, because they can be affected by one-offs. And that is what has happened to REA Group. That's why profit is up by a significant amount. But just below that, we have net profit after tax from core operations up 26%. So I do prefer to look at underlying results, not reported results. And that profit up 257% is reported profits. That is what they will report. And you can definitely see that by the, no, you can't see it here, but the earnings per share somewhere. I'll look at that probably when we have a glance at the profit and loss statement. The other interesting thing here is dividend growth of 30%. Now, I think there'll be a lot of income investors who won't even take a second look at REA Group because the dividend yield's too low. But if you're patient and you don't need the income right now, this is the sort of company you want to invest in because their dividends are growing significantly over time. And those investors who bought in 2005, their dividend yield on their initial investment is going to be massive. In fact, the ultimate goal for me is to buy a company, hold that company for an extended period of time, and eventually the dividend I get from that company is greater than my initial investment. That's the dream. And you'll never be able to get that with CBA, Telstra, but with REA Group, you might be able to get that because I do think this company has great potential to grow significantly over the next 20 years. Okay, so the next thing I look at, or really the first thing I look at when I'm looking at financial statements is profit and loss. Sometimes I'll look at profit and loss first, sometimes cash flow statement first. It doesn't really matter. But the main thing here is why was the reported profit up 240% or so. And if you have a look at the profit and loss statement, first thing I should mention here is I always look at revenue growth first because that's the top line in the profit and loss statement, which means the further up an item is in the profit and loss statement, the less likely it is to be manipulated. Now, when I say manipulated, I don't mean for nefarious reasons. I mean legally manipulated by accounting standards. And one of those manipulations can be one-offs. And we see that with REA Group's numbers here. And if you go down, probably halfway down, there's one item called impairment reversal expense. Last year, there was an impairment expense of 125 million, one-off. This year, an impairment reversal of 116.9 million, one-off. And you have to exclude that to get the real profit or the underlying profit of REA Group. Now, the reason that's important is because if you have a look at earnings per share, last year it was 96.5 cents. This year, $3.34. So massive growth in earnings per share. So if you have a look at the PE ratio of REA Group, it's probably like 100, which can be a little bit misleading because of the one-offs last year, which actually suppressed the real profit of the company. So just keep that in the back of your mind. If you just look at PE ratios and profits of a company, they can be manipulated up or down legally, like we have seen with REA Group. After profit and loss statement, I have a quick look at the balance sheet. I didn't have my look at REA Group's balance sheet was really quick. In fact, the only thing I looked at was equity, and equity grew by a fairly good amount. I want to see equity increasing through time, and we definitely see that with REA Group. And then I look at the cash flow statement, of course, and nothing much to talk about here. Everything's moving in the right direction for REA Group. Okay, so in fact, let's have a look. I'm just going to have a quick look at REA Group in FinChat. I just want to see what the P ratio is. I'm pretty sure it's like 100. Oh, I'm looking at the wrong one. I have to open it up. There we go. Fine enough. Apparently, according to that, I can compare different companies. So REA Group's P ratio 108.4, and the next 12 months expected P ratio is 58.8. That's probably more like underlying real P ratio of this company. The reason it's so high is because of that one-off, that impairment expense. So the real profit for this company was much higher in 2024 than what they reported. And that's why the P ratio is quite high, or seems quite high. And I can almost guarantee you there will be some investors who get caught out by that. They see the P ratio of 108, go, oh, it's way too expensive. No. But a P ratio of 50 to 60 might be okay for a company growing strongly like REA Group is doing. Anyway, so that's up to you to decide whether you like this company or not, and whether P ratio of 50 to 60 is high. Okay, now a couple of interesting things. Now, I think I've mentioned Owen Wilson, the CEO, has retired or is going to retire. But the other interesting thing, when you have a look at the Alex section in the media release, they do talk about, if I can find it, there's a lot of words here. Oh, in the 4th paragraph down, we continue to target positive operating jaws in financial year 25. Low double-digit group or operating cost growth is now anticipated compared to high single digits previously. So previously, high single digits costs. Now it's double digits. So slight increase in costs. And that's probably one of the reasons why the share price actually did dip on open. Plus, we had the CEO retiring. But now the share price is up. And I think the market now is looking past those cost increase. And these results actually did beat expectations. I've confirmed that just by going to Capital Brief. A few analysts have just mentioned, for instance, UBS. First half EBITDA 2% ahead of consensus estimates. Jarden called it a very strong operating results, but expects the market to focus on REA's downgrade to its full-year cost guidance. Initially, they did, but it seems like the market is ignoring that right now. Oh, and the surprise exit of Wilson. I think the market did linger on that as well on open, but now is saying, well, even though it's an increased risk, increased uncertainty, there's a potential that the next CEO is going to be absolutely great. EMP Capital Analysis flag results marks a solid start to the second half of the year. While Wilson is incredibly well regarded, the strength of the business model will, in our review, sustain a CEO departure. And I'll probably have to agree with that. Okay, so let's have a look at the chart for REA Group. And what's there to say? This is a high-quality company. This is the chart of a high-quality company. And when I say chart of a high-quality company, I'm talking about the longer-term chart, like the weekly and monthly chart. Because in the short term, you might see a little bit more noise. But if you have a look at the last 20 years, the share price of REA Group, we don't know this because we've seen the total returns for any shareholders in this company, phenomenal returns for any shareholders in this company over the last 20 years. But if you go back to, say, February 2005, the share price of this company was around about $2. Now it's $257.77. This has been a 100 bagger over the past 20 years. That is this is a sort of company you want to own for the long term. The question is, how do you find this company? Yeah. Anyway, and in the short term, chart looks pretty good. In fact, the share price today has got to an all-time high. In fact, the one-day candlestick looks really interesting. If we have a look at the 1-minute chart, you'll see a sell-off on open. I almost guarantee, yep, there's a sell-off on open, and that little negativity around REA turned positive quite quickly. Some fairly big volume coming in the first hour, but by about 2 hours after trading began, the share price was up. Anyway, so that's all I have for the stock of the day, REA Group. Pretty good results. CEO retiring is a slight negative. Also, a slight ramp up in costs, slight negative, but overall results are pretty good. Beat expectations, and you're always going to take revenue growth of 20%, profit growth of 26%. So nothing to complain from a shareholder like me. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.